Moving the needle on founder failure, one conversation at a time. I'm your host, Justin Gordon, and welcome to Startup 2.0 by Spark XYZ. Join us each week as we give you access to some of the top investors and entrepreneurs in the country to help you think through and overcome the top challenges that startups face.
I think there's no better place in the country to be investing than Los Angeles.
What is the problem that you're solving and for who? Like, what is that specific pain point?
Sometimes when a company is not listening to its customers and just thinks it knows better than its customers, has a really, really hard time finding product market fit.
I want to see somebody that isn't going to stop. You know, this person, you just feel like they're gonna make it work.
Today's guest is Brett Munster, who's a principal at Sway Ventures. Brett focuses most of his investment time on the seed and early stages for the fund. He also does due diligence across all investment opportunities for the fund and works directly with their portfolio companies. Brett, welcome to the show.
Hey, it's good to be here. I've seen a few of the other episodes, so I'm excited to be on one.
Yes, now you're in the hot seat.
I
so
am.
Here we go. With Sway Ventures to start with, what areas is the firm focused on?
Yeah, so we are predominantly a B2B enterprise focused fund. We originally started doing 50-50 consumer and enterprise and just found that, scaling consumer businesses, customer acquisition costs have gotten so expensive and that channel's gotten so crowded that over the years we've leaned much more onto the B2B side. So anything fintech, cybersecurity, software logistics, AI, machine learning in the enterprise, SaaS is right up our alley.
Yeah.
And then in terms of stage, we're multi-stage, so we kind of invest across the stack, but most of the capital we deploy and kind of our bread and butter is Series A and B.
Okay. And then, so with that too, just people want to know, what is that check size typically then at the different levels for you?
Series A, it's, call it $3 to $5 million size check from us. And then at Series B, 5 to 10.
Okay. Awesome. And then with that too, so you have the areas, we have this size. What is your kind of investment thesis?
Yeah. So we really believe that, software is going to liberate, from inefficiencies in the world, right? So we want to invest in, software companies that are, eliminating inefficiencies, whether that's, in fintech and you're able to drive down. We've got a company called Tally and, automate a lot of that life and, make your finances a lot easier to manage, right? Whether that's, in cybersecurity and you've got IoT and you have all these, different endpoints that are connected. And so now you've got a lot more endpoints that are susceptible to being hacked, right? So eliminating any kind of those inefficiencies using software. We love old markets that, are still being run on, email or sometimes even fax, right? And using software to just streamline that process. We really think there's a lot of value creation to be had there.
Yeah, and then roughly, how many investments are you making each year?
Yeah, we're fairly active. Call it, 10 to 15 investments, new deals per year, and then plus, any follow-ons that kind of happen, with our existing portfolio companies. So we definitely reserve a lot of capital to do follow-on investments. We want to follow on and support the companies all the way through exit as much as we can. So we try to invest not just in the round we lead, but we try to invest at least, another 2 or 3 rounds after that as well.
So having plenty of follow on there too. And then with the actual process that you go through for due diligence, what does that look like for Sway Ventures?
That's very company specific, right?
Yeah.
If we've made a small seed check in an earlier round and then we, have gotten to know the team, right? And we followed and we've gotten updates and, we're checking back every 3, 4, 6 months, whatever the case is. We know the team well, we know the progress, we know where this is going. That's a pretty easy diligence and quick, right? We can get to, term sheet really fast in those situations. And it's a larger part of the reason we like kind of investing a little bit earlier than A and B where we want to lead rounds. If we're coming into a deal kind of cold, right, and the first time we've ever met, we're going to want to get to know the team. We're going to want to really spend time on, the market and all the facets of the business. So, probably takes at least a few weeks, if not more than a month. But there's companies we've known for, a year plus, right?
Yeah.
That, I guess, we've been tracking and following and having regular catch-ups with and trying to maybe help out a little bit, introduce them to a few customers. We know what those customers' reactions are, so we've already kind of got that out of the way.
Yeah.
And so, some of these you could say diligence was over a year in a way, right? Because we've
Yeah.
really gotten to know the team well. That's really quick. When they want to go raise that next round, it's really easy for us to issue a term sheet and move pretty quick in those instances.
Yeah, I mean, and with that too, you mentioned some of those companies, it can be like a year, which is, you meet them and it could take a long time. I mean, how are you kind of managing that side of things in terms of how many companies you're looking at over a course of time, or just you kind of just remember as you see them? How does that go?
Yeah, so there are, I don't know if there's any formal way we do that. There are a number of companies that, I'm really interested in. I cover a lot of LA and Southern California for the fund. So there are a number of companies within LA that, I think are interesting that, might be raising a Series A or B sometime next year that I'll, want to check in with every few months. It's kind of on an ad hoc basis that each of the partners kind of follows up. I don't know if we rigorously track that probably as well as we should.
Sure.
But there are, definitely companies, and then there's companies we've made small investments into, at the seed level. And those are, pretty easy those we touch regularly. Those we are pretty systematic about. Regardless of the check size we've written, we want to be helpful in some way, shape, or form. And we'll try to do our best to actually help out and introduce to customers, and regardless of if we led the round or not.
Yeah, and with the 10 to 15 investments you're roughly maybe making in a year, you obviously see a lot more companies than that.
Yes.
What are some of the red flags or ways you eliminate, or how do you decide which ones kind of move through the
Yeah,
pipeline?
so there's a quick filter we use. It's got to be when we lead around. So we're talking about leading a Series A or B, right? There are certain ownership targets we do want to try to hit, right? And if you're raising a certain amount, right, and we're kind of means you're going to have to fall on a certain valuation, right?
Right.
And so if you are expecting a huge valuation way above, we see a lot of times in the Bay Area, and we can't quite get to our ownership, then it's a pretty easy filter. If you're not in an area that where we have some sort of expertise that we think we can actually help out, given the expertise of our partnership, that's a pretty quick filter. No. So we'll pass on a lot of companies pretty quickly, just because we know right off the bat. May not mean that that company's bad.
Sure.
Just means we know we're probably not the right investor for them. When you start talking about the ones that make it through that initial funnel, you've had a meeting, or you start talking. They've met with the partnership, they've gotten deeper in diligence. In terms of red flags, one thing I think I've really learned is the diligence process is as much about the entrepreneur and how they operate than it is about, we're checking, some financials or the cohort metrics and all that, right? So the entrepreneurs that we've seen, or at least I've seen, kind of a direct correlation with the entrepreneurs that have all that down and are able to produce a lot of those requests pretty quickly. Even if it's, hey, here's 75% of what you asked for, I'll get you the other 25% in the next 2 weeks, and, a week later there's another set, and then a week later there's the rest of it. Those entrepreneurs we've had a lot of success with. The ones where we have to constantly track down and, hey, you said you were going to send this. Hey, we still need this. Hey, we had a question, you didn't answer it, right? Just those little things in diligence, we have found, those translate, right? There's something there where, that entrepreneur or that team just isn't operating on quite the same level, I think, as, some others. So it's as much as that kind of gut feeling, what you see them and how they actually run that process, is as much as, we dive into the finances or the market size or all the other things that every VC says that they, go over.
Right, some typical things. Yeah. And with that too, getting to know the teams, everyone kind of has their own different thing. I'm curious, are there any particular questions you ask, or how are you actually going about getting to know the team, and at what point are you like, okay, this team is solid?
Yeah, the team's so subjective, right? I might think one entrepreneur is awesome, another one, other people aren't impressed. Some people want to see, logos, whether it's school or, big tech company, or, I do like that when the entrepreneur really has experienced the problem, right? And really intimately knows the problem. If it's, hey, I'm a great machine, I built a bunch of machine learning, and now I'm just going to go apply it to this random problem because I think there's, we can apply. that tends not to work as well
Yeah.
versus, hey, I experience XYZ problem in my former job or in life instance or whatever the case may be. I'm now using machine learning to solve that problem, right? It's a very different mentality to come at the problem with. And it's those entrepreneurs that tend to find new ways and navigate the tough times, I think, better. And so for me, when you're really talking about, what makes a team good, it's not just the experience, but it's also kind of the why behind it is really important.
Yeah, so you're looking for that kind of matching up that as well.
Yeah.
As you go through it. Yeah, 'cause there's so many ways you can eliminate people through this process, but I think that would be a good one. And actually, one of the things you mentioned before, going back to kind of knowing that you're a venture firm, you're focused on certain areas, even if the company is potentially a good company, just not for you. How do you look at the competition of everyone around you in terms of being so many different venture firms at different levels? How do you look at that?
Yeah, even in the 5-6 years I've been at Sway, it's changed dramatically. There's so much capital, especially in the Bay Area, and we're headquartered in San Francisco. I'm based here in LA, so I get to kind of see dynamics of both markets, which is fun, and we can happy to go into that if we want. But there is a ton of capital. The top tier funds have raised bigger and bigger funds, which means they've got to write bigger and bigger checks. So when I first started, right, it wasn't uncommon if it was a $10 million round, someone would do, call it 6, someone would do 3, and then there'd be 1 left over for insiders or whatever the case may be.
Yeah.
Now that venture fund is taking that whole 10, or maybe, company wants to raise 10 and they've got to write 15. So the round size is 15. So now they're telling more, and we've had instances, we've seen that.
Jeez.
It's just it's the nature of the beast. When you raise those bigger funds, you've got to deploy much more capital. And so you've got a lot more sharp elbows, and you're boxing out a lot more. So it makes the competition really tough. And, so what we have found is, if we're in early, even, and we prove that we can actually add value, right? I know it's a cliche term, but if there's something we can do to actually, get in and show what we can actually help accomplish, whether that's introduce to customers, help recruit talent, maybe it's just overall strategic, whiteboarding, helping out, maybe it's helping fundraise, whatever the case is that we can, kind of dig in on. One, hopefully maybe we can preempt the round, right?
Yeah.
And maybe they never even go to market. That's where it has happened, but frankly, that's still rare.
Rare, yeah.
But we find that we are much more competitive in those situations when we've had a chance to really show what we can do with an entrepreneur and with a team, versus if we're coming in cold and Sequoia's coming in cold, right?
Yeah.
That's a tough situation for us.
Yeah, it's a bit more challenging, obviously. And then looking at, you mentioned SF versus LA.
Yeah.
Might as well talk about it.
Yeah,
What are
let's
the
do it.
differences you see in it? What are some of those differences, noticing that you're back and forth between the two sometimes? Mostly in LA. Though.
Yeah. So, there's just so much capital up in the Bay Area, and the funds are just so big that, like I said, they've got to deploy. So, a lot of those firms want to take the full round. A lot of the top tier funds, especially at the Series A or B, and there isn't as much syndication. LA feels a lot more collaborative still. There's some great funds, but they're relatively smaller compared to the Bay Area. And so if you see a $4 million round in here, you're likely going to see 3 or 4 different funds, LA funds, in that round. So it still feels much more collaborative, which is great. Which obviously is I like that dynamic a lot better. I think that's better for entrepreneurs, right? I think you get more, not only do you get more expertise around the table, and then you get more, potential network of people, of whoever you can, bring to the table. But if you have to get to a bridge round, the next round, right, it's sometimes tough if one fund has to shoulder that whole responsibility. If you can pass the hat across a couple different funds, the likelihood of that bridge round getting done, I think, is higher.
Yeah.
So, just having that collaborative network or feeling down here still in LA is very refreshing.
Yeah. As you go back and forth between the two too.
Yeah.
Because Sway is based out of, you said, SF.
Yeah, we're
right?
we're headquartered in SF,
Yeah.
but I'm based here in Culver City,
Okay.
and cover LA and most of Southern California for the fund.
Yeah.
LA is our second biggest market. I'm originally from LA, so I've been, preaching, internally that we should be doing more and more in LA. And,
Sure.
To their credit, over the years, we've made a bigger impact and push into Los Angeles.
Yeah.
So yeah, it made sense to have someone down here full time.
Do you notice that other venture funds based in SF are doing the same thing and having more of a presence in LA? Or how's that
Yeah,
gone?
or at least coming down more often.
yeah.
Yeah, I know like Lux has people here, Sequoia has a partner down here. There's a number of venture funds that have, or at least willing to come down to LA. I think, you almost just can't, there's too much competition and too much capital in the Bay Area. I don't think you can just only stay in San Francisco, unless maybe you're Sequoia or really name brand fund.
Right.
So yeah, there is a push to move out, which is great. And I think LA is benefiting from that.
Yeah, get more money, more funds, everything that's happening in LA. And we've talked to obviously a lot of different VCs now, and they all are talking about how LA is obviously growing. There's more funds overall, which is helpful for the entrepreneurs to get more access to capital. And back to the focus on the entrepreneur side of things, with the portfolio companies you have with Sway Ventures, what are some of the challenges they're facing, things they're going through right now?
There's always a challenge with someone,
all the time.
but the most consistent one's always hiring, recruiting, right? Especially engineering talent seems to be probably the most consistent, ask among all the portfolio companies. But it can vary depending on the stage. Sometimes it's recruiting, sometimes it's driving business development, whether it's, hey, especially on the enterprise side, we want introductions to these 20 companies. Cool, we know 10 of those will sign up and try to help drive introductions and actually help you make sure you broker those meetings and help actually manage those kind of accounts, at least at first.
Yeah.
Sometimes it's, hey, need help fundraising, or right, cool, let's go over the deck, let's practice, let's whatever the case is, anything short of actually writing code or kind of going over the actual product, we're willing to jump in and do whatever we can.
Yeah. And to the recruiting part, then, how are you helping on that side? Because that's like huge for any company.
Yeah.
Recruiting, and they struggle with that. How do you?
Historically, I think we've been pretty good at the director level, kind of executive level, helping, CMO, CFO, VP of engineering, those high level roles. I think we've been pretty good. And it's always kind of been on an ad hoc basis. We've got a internal, we call it a lookbook of, profiles of a number of people in our network that we know are either maybe looking for their next opportunity or could be very interesting candidates to come in and take a role like that at a startup. So it's kind of proprietary for us.
Yeah.
Where we have struggled, in all honesty, and I think we recognize this, is your general engineering roles or your marketing and sales roles, right? We've historically not been as great because we don't have an HR recruiter on staff. That is something hopefully we're looking to bring on, and nice. And try to up our game on that level. Yeah. So hopefully next year we're able to bring someone in. That would be great.
Yeah. Well, after they hear this episode, they'll just
there we go.
Clearly want to.
But yeah, no, I think historically we have tried to be pretty good, especially at the the director and higher end roles.
Yeah, which is so important. And then looking at too kind of the opposite end for the struggles, but also what with these portfolio companies has made them the ones that stand out the most. What has been the reason why they've actually
talent
done well?
Again?
Just better team.
Yeah, ability to, I think, punch above your weight class when hiring, right? Being able to attract talent that could probably otherwise go to Google or Facebook or some big company and earn a much bigger salary, right? And have your dry cleaning and all the
all the perks,
kids daycare and all the perks, right, taken care of, but instead get bought into the vision or believe in the entrepreneur so much, or willing to jump on. That seems to be the number one sign or indicator, like leading indicator for us that there's something special going on here. Yeah. When you're punching above your weight class on the hiring side. That's probably the... Yeah,
and then to that point, then you mentioned kind of the vision and being able to tell that story is a big part of it, and then also just having the background of what they actually have done before. How can people better kind of communicate that? You also mentioned helping these companies with their decks and everything else as well. I mean, how can they improve upon that process and tell their story of their company?
Yeah, storytelling's an art. And the ones that can do it well, right, can not only raise money, but can attract talent, can sign customers, right? And so if you're struggling to tell your story concisely, crisp, in a very clear manner, to us, that's, indication, not just whether we should invest, but, are you going to be able to attract talent? Are you going to be able to, sign customers? And so, the challenge most entrepreneurs face is they're so in the weeds, right? They know their business so well.
Yeah.
And they want to go deep right away. They want to dive in. But they forget, maybe we're seeing this for the very first time. We're not there day to day yet. Entrepreneurs pitching me, they've got to kind of make sure I understand what they do first. One of the biggest mistakes is, right, they dive in, I'll be 6-7 slides in and like, time out, hang on. What is it that you do? Oh, we do. Okay, now I can get to that next point, right? And it's really easy when you're in the weeds because you know it so well,
sure.
Right? And there's so much you want to talk about and all the things you've built and where you're going and all this. But if you can't walk someone through that, basic understanding of what it is you do, what the opportunity is, why you, you're never going to be able to go down that rabbit hole and get interested, right? The first meeting, you're not trying to get an investment from me, right? That first meeting, your goal is to get me interested, right?
Yeah.
Get me curious. If I can get, interested into what you're doing and start asking questions and we start going down a rabbit hole, that's a successful meeting as an entrepreneur, right? I'm not going to make a decision off that first meeting.
Yeah.
But your goal is to get that investor interested and excited. And the best thing is, another mistake I see a lot of entrepreneurs is, they've spent all this time on making this beautiful deck. And it's, they've got everything in there. They've hit all the bullet points and they want to get through the entire deck, right? And it's, they're going to, no matter what, they're going to get through every slide on that deck. And if I start asking questions and I want to go down the rabbit hole of market size, or I want to go down, what happens if this strategic thing goes on? How do you respond if this happens? Or
right.
where does this whatever it is, now you've got me interested. And we don't cover, the back half. That's much better than covering the entire slide deck. In fact, and then as an entrepreneur, the trick is that's a great excuse to follow up with me is,
true.
Hey, love the conversation. You asked great questions. It was awesome. We didn't get a chance to cover XYZ. Would love to, meet up and tell you more about all that, right? That's actually a great way to follow up and get us continuously interested.
Yeah.
And the entrepreneurs that can do that well and can make it much more conversational and can go down that rabbit hole regardless of, what interests that specific investor, I think have a lot more success than the ones that are much more formulaic and they want to get through their deck and I put this beautiful pitch together, I'm going to show it no matter what, right?
Yeah.
Just isn't as successful.
And now we'll take a quick break and hear from our sponsor, Brex. A big heartfelt thank you to Brex, who without their support, this show would not be possible. We've seen firsthand the difficulties accessing basic corporate credit without providing a security deposit or personal guarantee early on. As companies grow, managing expenses has become more difficult and time-consuming, which is why we've partnered with Brex to offer a corporate credit card that is not personally guaranteed, offers higher credit limits, provides auto reconciliation, and integrates with ERPs using receipt capture. Brex is the credit card of the startup ecosystem, and we highly encourage you to check them out. And back to the show. Brett, with the future looking forward, what are you most excited about in terms of industries, companies, anything else happening?
Yeah, so I think if you look back historically, right, on where a lot of the big successes have always happened on top of, new paradigm shifts, right? Whether you're talking about, databases or, and then you're moving into, PCs in the internet era to smartphones to cloud, right? And these different areas that were new infrastructure that was built, and then you had amazing companies built on top of each one of those, new infrastructures. What are the new infrastructures getting built today, right? And I think, that the next big successes are going to get built on top of. And to me, there's two that I get really excited about. I think one's going to be kind of, very buzzworthy, right? Going to be a buzz term, and another one is I think not a lot of people are actually looking about. So we'll start with the more trendy one, which is blockchain and crypto. If you look at the smartphone, it was worse in many ways when it first came out, right? It was smaller. The real estate, you couldn't run ads. It's small real estate. You couldn't, no one's ever going to do work on it's too small. It's hard to browse the internet, but you fundamentally had something, a computer in your pocket that, now enabled GPS and now had a camera with you at all time, right? And now you've got Uber and Instagram. And so there were native applications to the smartphone that were much more, even though the smartphone itself wasn't better at first, it eventually got there in time, but there were native applications that were enabled, right? That became huge successes. With the internet and computing or personal computer, right? You had social and you had Google, right? The ability to connect people all of a sudden was really compelling that you couldn't do in a way before. So what are those kind of new native applications that can be built on, crypto and blockchain? And to me, it ultimately comes down to you've got this new computing paradigm built around trust, right? You've got full transparency because anyone can look at any of the transactions or anything built on any time. You've got immutability, which means it can never be altered or changed. And you've got decentralization, which means it's not controlled by one party, right? We've seen all the problems that Facebook and Google and all these data companies are going through because you have one central organization and they're controlling all that data. And that's obviously become very problematic. So now you've got a computing platform that is based on trust that is, performs worse than many centralized, databases today, right? It's slower, non transactions, right? But I'm not going to bet against engineers figuring out the scaling problem, right? Like that will get solved in time. What are the cool new applications that this enables, right? And so you can go down the line between, DeFi and basically, the ability to automate a lot of finance stuff if we can, peer-to-peer and cut out a lot of third-party middleman. You can talk about supply chain and logistics and ability to track a lot of that. You can talk about, the housing market, or you can talk about just, digitizing a bunch of securities and making the tokenization of everything where things now become liquid, right? And now you've got markets for assets that were never liquid before. I think it opens up a whole new set of interesting opportunities that I think, you follow the price of Bitcoin and that's fun and exciting, but I think that misses the mark on what is really truly unique and revolutionary about that new technology. Yeah. So that's one that I think is really interesting. The second is, and this is the one I don't think very many people are paying attention to, is aerospace. And so what has happened over the last 10 years basically is the cost of satellites to both produce and launch has dropped like 100x, right? It's a lot cheaper, and it's still expensive, it's still hardware, but it's, it's within the realm of possibility. It doesn't require, billion-dollar government programs to do. We're seeing the privatization of that market in real time here. Not only SpaceX, but you've got a bunch of startups that are coming in and tackling this issue. And so the result of that is we're seeing a lot of new satellites being launched, not just by new startups, but you've got Amazon and Bezos launching a bunch. You've got Facebook launching. You've got SpaceX launching Starlink. And frankly, that's kind of the bull case on SpaceX right now. Beyond just the launch business, if Starlink can really become 24/7 global 365 internet, now you've got the new Verizon in space, and I think a lot of the terrestrial infrastructure is going to get moved up into space. So now you've got so with the launch of all these new satellites, you now have an infrastructure built in space that is going to be beaming down data that we've never had before. Aerial imaging, spectral, hyperspectral, all sorts of new data that we've never had. And what can we build with that new data insight? we've got one investment in the space, no pun intended, that is doing just amazing things. It's a software company that is, taking a lot of that data and doing just really cool, interesting use cases. I think we're going to see a lot more in agriculture and oil and gas and finance and a lot of different applications that are going to leverage this huge new data wave that we're going to be beaming down from space to Earth.
Yeah, and so aerospace and blockchain, knowing that these are things that you're excited about, then,
Yep.
how are you monitoring that, keeping tabs on what's going on in the industry as you are obviously looking at other areas as well? How do you personally do that? I'm just curious.
It's challenging, right? There are definitely a lot going on in both industries right now. Crypto blockchain's moving so fast that it seems like every week there's something new, crazy to follow up on. And finding how we play in that space, and how you invest, right? And because it's not just you take typical equity. Do you invest in tokens? How do you then manage and custody all? Like, there's a lot of new challenges with that space that we're diving into and trying to figure out. And then with aerospace, a lot of that right now is still the infrastructure phase is getting built out. So a lot of satellites are being launched. A lot of for different use cases, for different types of data. And so we're still, I think that one's earlier. I think we're still sitting back trying to figure out, because we're not going to go do a hardware and launch a bunch of satellites. That's not what we're going to do. We want to try to find that software component to it. So that one we're monitoring, I think, is a little bit easy because we're still in that infrastructure phase.
Yeah, that makes sense. And looking at we kind of talked about earlier, being so many different venture firms and just more money like everywhere now seems to be being invested. How can startup founders actually ask questions about which VCs they want to work with, or how should they approach the process of getting funding in the first place? Because there are so many different options.
Yeah. Look, you should be interviewing us as much as we're doing diligence on you, right? And so there's nothing wrong with asking for references and talking to portfolio companies and founders we've backed, and not just the ones that went well, but maybe ones that didn't go so well. It's really easy to get all excited when someone sends you a term sheet and given the competitive pressures, that time is shrinking, and that's actually, I think a detriment to entrepreneurs, right? It might be quicker to get to a term sheet because of the competitive pressures, but that's less time you get to know the VCs who now you're, basically locked into for 10 plus years.
Decade, at least. Yeah.
And so doing the diligence on actually, how did they act when, not just when it's a hot deal and everything's good, but were they there when, hey, we needed to do a bridge round and we needed help with something, or, whatever the case is, were they still there and were they supportive? I think you can find out a lot of that. And I don't think a lot of entrepreneurs take the time to do that, and probably only find out after the fact, unfortunately. But yeah, there's no reason why any entrepreneur can't be doing reference checks and talking to other entrepreneurs in or outside our portfolio, about us, right?
Yeah.
And I mean, I would gladly, recommend any of the entrepreneurs, in LA that I've worked with to any of the founders we're looking to invest in.
Yeah. And with your career path here the last few years, I mean, why did you get into venture in the first place?
Yeah. It's funny. Most people actually say they kind of like stumbled into venture, and I actually deliberately tried to get in, which was, I think, actually not the norm, ironically enough. Yeah. So I was part of two different startups coming right out of college. One was successful, one wasn't. But the second one was my first kind of exposure to venture. It was the first one where I was kind of part of the fundraising. We raised a little bit of money. But I remember coming out of the first venture meeting and thinking, how do you get that job?
The other side of the table.
Well, because I realized if they were talking to me, they were talking to a lot of other interesting, cool companies. And so you get to learn on a daily basis, which is probably the thing I love most about this job. Every time I get to meet with an entrepreneur, I get to learn, stretch my thinking, and I get a question. And I think that part's one of the biggest perks of this job. But you get to work across a number of different cool industries and see a bunch of cool things. So how they get that job? And all right, so that kind of always stuck in the back of my mind. So I'd done that startup for about 2 years and took an operating role for a few years, and came back to USC to get my MBA. And when I came back, I was thinking, what do I want to do? And every time I just kept coming back to like those meetings, like that would be a really cool job. All right, so how do you go get that job? And found out it's not easy to break into, but hustled my way into a role with Sway, and it was part hustle, part luck. It was right place, right time. They had just launched the fund. They needed a bunch of help, so got lucky. And I've been with them ever since.
You say got lucky. I mean, how did you actually reach out? Hustle your way, if you're willing to share.
Absolutely. You get this question a lot.
Sure.
How do you break into venture? And the honest truth is I don't think there's a ton of roles that are just advertised as, hey, we're looking to hire so-and-so associate, apply, and we'll sift through a bunch of like that happens, but not, maybe at the analyst roles or the lower end roles. But I don't think it's actually the norm. I think more people I've talked to broke in and created a position that wasn't actually there, and they were never actually looking to hire. I never interviewed at Sway, right? I never had a formal interview.
Whoa.
I got connected to them through, in fact, one of a professor at USC. One of the general partners had gotten his executive MBA at USC, and we had the same professor. So luckily I'd done well enough in our class that she was willing to reach out.
Perfect.
Reached out to him. We were supposed to have a meeting, canceled on me. So busy, right? They just launched the fund. They were raising money. They were doing deals. They were setting up processes. They had too much, going on. And this is where kind of right place, right time, right? And so I tried to schedule a second meeting. Great. That got delayed and canceled again. Happened about a couple times. I was just persistent about, hey, want to come down. Finally got the meeting, figured out, going in that, like, you're obviously really busy. What can I do to take things off your table?
Yeah.
Like, what can I take off your plate? And the whole meeting kind of ended up being around what can I do for them, not, hey, nice to meet you, not about me.
Right.
And so kind of led to skunk work projects, right? Hey, can you do some market research on this company we're looking to invest in? Hey, you did a really good job with that. Hey, we're looking at meeting with this company. Mind jumping on the phone call and just kind of listening in quietly and giving us our take afterwards? And, just doing small things like that got me more ingrained. That led to an internship. And by the end of the internship, I kind of just got myself so involved in everything, the day-to-day operations, and just took on everything, and basically was trying to give them back time, right? Anything I could do to take off their plate, to give them more time to go do higher leverage things, I was going to do. And I was going to do proactively. And basically by the end of the internship, they, not to brag, just to emphasize the point, like, I don't think they wanted to go back to a world without me involved, just because I made their lives easier.
Of course.
And so they actually, this was between first and second year of my MBA program, and they, offered me the job, and the original offer, they didn't want me to go back second year.
Just stay here.
Just stay here. Just stay. Guys, I just paid all this money. I did all the hard work in the first semester.
Yes.
I want that degree. So came to an agreement where I set up all my classes on Monday, Tuesday, Wednesday, and then worked Thursday and Friday for the firm kind of full time. And so, all my colleagues were, cruising second semester. I was working, felt like I ended up spending more time working at Sway than going to classes and doing that. It was much more interesting. Yeah. And then as soon as I graduated, I was with them full time, and been with them ever since.
So in that summer in between, were you in SF then for this? Or are you actually working on projects in LA?
So we have an office in San Francisco, San Diego, and now we just recently opened one up in Stockholm as well too.
Okay.
So I was splitting time between San Diego and San Francisco. So I would either drive down or fly up Thursday morning. Okay. Literally sleep in the office Thursday night, work Friday, fly back or drive back Friday evening. Yeah. Probably do a little bit of work on the weekend too. But yeah, that was my life, my second year of business school.
Love it.
Yeah.
Man. Oh my goodness.
But I think it takes that kind of effort to really break in and stand out.
Yeah.
It's doable. So anyone listening to this, right? It's absolutely doable. You can absolutely make it happen. But going about it, trying to apply on resumes is not the right approach, in my opinion.
Yeah.
You've got to build a relationship, and you've got to, find a way to create a position that isn't currently a position that exists today.
Yeah. I mean, did you at that time too? Did you have your eyes on other venture firms that you were?
Yeah, I talked to just about everybody in LA I could. And it was, most of they were great, gave me great advice, but basically at the end was, hey, good luck, right? And keep me up to date. And
Yeah.
I can understand why they said that, right? And they get, I get hit up all the time for advice, and try to take as much of those as I can and try to pay it forward.
Yeah.
But it's tough to really break in. So finding that role where you can really add value to the company and to the firm, and making it so they don't want to go back to a world without you.
Yeah.
That seemed to work. And I've talked to a few other, colleagues and people that, one shape, form or another have kind of a similar story to that. That seems to be a much more common way to break in than applying online.
Right. Here's a job app. Yeah. It's not the same.
Not going to work.
And how is your time spent day to day now? That's what
Changes.
Of course.
Another thing I love about this job is dynamic, right? So we're fundraising for fund 2 right now. So I spend a fair amount of time talking to potential LPs, going over the portfolio metrics, going over portfolio companies, talking about the model, answering whatever questions that they have. Spending a lot of time with our portfolio companies right now. Earlier this year, we were, more active, and so spent more time sourcing deals and conducting diligence and executing the transactions. January will come around, and there's, a bunch of audit and back office stuff that kind of needs to get done. So that'll take a lot of time. It varies based on the time of year. It varies day to day. I could be, spending, an entire afternoon with one of our portfolio companies, whiteboarding, going over strategic decisions, trying to help them work through a problem. The next day I could be just, head down answering a bunch of emails from prospective LPs. It varies constantly day to day.
Yeah. Every day is just different.
Every day is different.
Yeah. What you say you like? You like that type of different
thing.
Variety.
If I had to come in and do the same thing 9 to 5 and punch the same TCP report and over, man, I would not be a good employee in that situation. The diversity, the dynamic fluidity is I actually really like.
Yeah. And with your fund too, with Sway, I mean, how hands-on are you guys with the portfolio companies, and like what resources do you have or suggest to the entrepreneurs you're working with?
We try to be pretty hands-on.
Okay.
So we've actually got a pretty big team for relative size of the fund we are. So the investment team's about 8 people.
Okay.
There's 5 general partners. There's me. There's a couple operating venture partners. I think we have one other associate. So maybe 9. I think there's 9 of us. Yeah. We also have another 15 or so what we call operating partners. And those are, part-time or ad hoc people that we can bring in on, per company basis. So, for example, we've got an operating partner based in Washington, D.C., who, a couple of our companies, cybersecurity companies, sell into the government space. And he's got a whole government background, can help navigate the DoD, you name it, he can help open doors.
Yeah.
So we've got a competitive advantage in that space. And so, he doesn't work with all of our portfolio companies, but the few that want to sell into the government as customers, he works very closely with and absolutely opens doors. We've got, former CFOs and that can come in and, if you need someone to come in for 8 months, 12 months while you're looking to hire, or maybe you're not quite ready to hire that CFO yet.
Yeah.
We'll drop someone in for a period of time. So we try to do, things like that are, real value add or actually get in the weeds of the business.
Yeah.
yeah, we try to take a pretty hands-on approach.
Yeah, it's a pretty big team, and I think those are such big value adds having those people on board. Yeah, it's crazy. And then just looking kind of at where people can go to connect with you, or what's the best way for them to get in touch.
Yeah, email or Twitter probably. So email, it's Brett, BRETT @swayvc.com. And then Twitter, it's @bmunst. And then, LinkedIn's not a good one for me. I'm not really big on LinkedIn.
Yeah.
But yeah, no, happy to connect.
Awesome. Thank you so much for the time today.
My pleasure.
Thanks for checking out Startup 2.0 from Spark XYZ. If you want to learn more about startups and investing, you can check us out and join the ecosystem at sparkxyz.io.